Hello and welcome to Crypto Weeklies. In this video, we are going to analyze price forecast and regression evaluation of Uniswap and its token Uni. None of the content is financial advice. Let's get started. Over the last couple of weeks or so, Uni has on its USD pair garnered some sort of a macro support and has rallied from that base up by about 23% of the last 30 days. 4.5% or 4.2% over the last 7 days, 7% over the last 24 hours. So kind of volatile. Market cap still above 4.5 billion, volume at almost 1/10 of that, around 400 million. It's ranked number 27 by market cap. Ranking in terms of the tokenomics has about 628 million circulating supply of the 1 billion. Total supply does not have a max supply, but as the total supply and circulating supply are in a healthy ratio, that is more than 60% of the total supply is already in release. You can see over the last 1 year or so, if you toggle between the price cap and price chart and the market cap chart, they're essentially one and the same. So whatever happens to the market cap gets reflected evenly in price. That means impact of any new token unlocks is kind of minimal. You can see since about 2024, it's in a linear fashion. Increasing the token unlocks are in increasingly in linear fashion. If you look at the macro support that Uni has respected since June 2022 till about now, March 2025, almost now 3 years later, the prices are currently in a very key levels, slightly above the moving average of interest. The 20-week simple moving average coming in at around $6.45, and the 21-week exponential moving average at around $7.15. Price is above those two levels at $7.45. So let's see if there is a breakout from here, and if if Bitcoin and other major cryptos hold a bullish outlook in the remainder of July, and if Uniswap in those conditions, if breaks out of this area of resistance that it has encountered again the last time, also kind of struggles when it comes close to the 20-week moving average from this ascending white line, which is a major macro area of support. Now the next level to look for from a major peak perspective, the last two peaks compared back with March 2024 and December 2024 as an example, both going one fib level higher. In the March it was at 0.23 at around $13. In December the rally fell short of that 0.38 to at around $20. This time around again a $20 to $25. That's the midpoint between the 0.382 and the 0.5 fib level. That is a target to look for per the technical analysis of Uni. Machine learning based price forecast suggests that in the next 6 months, as this bull market year, the post halving year, comes to a conclusion, if there is a bullish rally again without any euphoria in the market, between $8 and $27, that's the price forecasted for Uni. That is the one standard deviation bull case for Uni. The base case is a sideways price action. Again, this purpose of this forecast is not to tell if the price has to go up as represented by the yellow line, or go down as represented by this green line, or stay sideways in terms of the pink line. That is determined by the market forces. But this machine learning based price forecast using seasonal ARIMA, LSTM and XGBoost machine learning algorithms help identify what could be the magnitude in certain price scenarios. So if the prices were to come down in the next 6 months, if there is a major cool off in the market, the support per this machine learning model is between $3.5, $3.5, that is, and $6.5. If there is a euphoria in the market, again, this is model does not consider that kind of a scenario kindly at this point in time. We'll revisit the model at a later point in time. And the week by week ceilings and the floors are established by using this model, using historical price action since the token launch in 2020 at a weekly price action level, and the machine learning models. So that's the bull case for and the base case and the bear case for Uni per the machine learning price forecast. The regression model, the polynomial regression model, helps identify the fair value of Uni and also critical points in its journey where the price action might meet some resistance if there isn't any major breakout. That is because of the price action having a sine wave kind of a regression based fair value, where the fair value goes up in the bullish phases of the market cycle, and the bearish phases of the market cycle, the fair value goes down. Right now, unfortunately, since about early November till November 2024 till now early July of 2025, almost 7 to 8 months, price action has been in a downtrend. So this regression model has come up with a resistance theory around $8 at a 2 standard deviation ceiling. The 3 standard deviation ceiling for UNI is coming in around $11. So unless there is a material change in the wider macroeconomic environment, as well as factors such as crypto in its last leg of the bull run of 2025, there is a miraculous return. The regression model thinks that unless the shape of the regression function were to change by a massive rally, the base case with this regression model is first at around $8, the 2 standard deviation ceiling, and then the $11 level. Those are the key points to notice for UNI with this regression based approach. The simple moving averages based approach to identify what could be a peak for UNI states that right now the risk is at around 28%. This is price color coded with respect to risk level. Cooler colors associated with low risk, warmer colors with high risk. If the prices were to go to this intermediate risk level between 0.5 and 0.7 risk, as it went in March and about December of 2024, this model helps identify what could be the price action in that environment between $18, almost $19 over here, and to that midpoint of the $20 to $25 at around $24. So that is the realistic scenario presented by both the machine learning based price forecast and the 20-week simple moving average, and the third point being the Fibonacci levels and the technical levels. So those are 3 areas of confluence between that $20 to $25 target for UNI. Although there are other models which might suggest that the risk levels for UNI are fairly low at this point, again, as the time weighted average price is coming in at around $10.60. Historically speaking, accumulating below the time weighted average price over a longer period of time, with the underlying hypothesis that the DeFi narrative, which again right now it's missing. The narrative word cloud does not say that there is any DeFi popularity in the social media sentiment around crypto. You can see DeFi and DeFi related narratives are not that popular. At least this is looking at the last 7 days worth of activity on social media platforms such as YouTube and X, and the content related to crypto. So no major DeFi narrative at this point, but nonetheless, with the hypothesis that in future, if there is a bull run and if UNI and as a major DeFi project takes part in that bull run, accumulating below the time weighted average price, historically speaking, has not been the worst time to do that. Again, you can see there were 2 to 3 instances where the prices did eventually go above the time weighted average price in March, then again back in June, and then again in December of 2024. In 2025 has not, the prices have not gone above the blue line, so that remains to be seen as we move close to the end of the post halving year of 2025. UNI does participate in the later rallies for this year. In terms of the estimated bull run target, again, as the regression risk is elevated, whereas the time weighted average price risk is not that elevated, the weighted risk comes at around 0.42. Estimated bull run peak is at around $17, slightly conservative compared to that $20 to $27 target for UNI. Still somewhere between 2.2x and 2.7x from the current price of about $7.30. And with that, I would like to conclude the video. Hope you enjoyed the content. If you did, please give a like and subscribe, and hope to see you again tomorrow. Thank you and have a nice day. Bye bye.